Welcome to the Fear and Greed Afternoon Market Report for Wednesday, the 23rd of June 2021, where in just a few minutes, I tell you everything you need to know about what's happened in financial markets and the world of economics today. I'm Sean Aylmer. The S&P ASX 200 closed 0.6% lower today, and even after yesterday's surge, sits 1.2% down over the past 5 days. The Bourse finished today at 7,299 points. Healthcare stocks were among the worst performers, down 1.4%. But they had plenty of company. Energy, utilities, industrials, and financial indices all closed more than 1% lower. Among the healthcare stocks, Pro Medicus finished more than 5% lower, Mesoblast was off 3%, and sector leader CSL fell 2.1%. The big banks did poorly. Westpac dropped 2%, ANZ and National Australia Bank were both down 1.4%, and Commonwealth Bank finished the day 1% lower. The travel companies also suffered after South Australia and Western Australia closed their borders to New South Wales, while Queensland imposed restrictions on travel movements from Sydney. Flight Centre dropped 3.5%, Sydney Airport was down 2.2%, and corporate travel management ended behind 1.7%. Online marketplace Redbubble.com was the worst performer today, down almost 7%. Technology stocks were easily the best performers. The technology index was up 1.1% for the day, while materials companies also did pretty well. Zipco finished 6.4% higher, and fellow buy now, pay later group Afterpay was up more than 3%. Among the best performers were Washington H. Soul Patts, which rose 8.5%, and Milton, which was up 5.2%. Remember, those two agreed on an $11 billion merger on Tuesday. Yesterday. Property group Dexus, which primarily owns office and industrial space, had an independent valuer come in to put a price on its property holdings. The external valuation resulted in the group upping the value of its portfolio by $362 million, or 2.3%, with the biggest jumps coming in the industrial portfolio. Dexus' share price today ended down 1.4%. And Woolworths said it will be hit with a $50 million non-cash impairment charge from its Metro food stores network as a result of lower sales due to COVID. Hardest hit stores were in the CBDs and outlets at transit sites. Woolworths has 84 Metro stores and 50 are located in inner city suburbs. In economic news, the country's biggest home lender, the Commonwealth Bank, has tipped that the Reserve Bank will lift the official cash rate late next year, well ahead of the central bank's current target of 2024. And Australia's trade surplus hit a record high of $13.3 billion during May, up 30% on the previous month, according to the Bureau of Statistics. Exports were 11% higher to $39.2 billion, driven mostly by iron ore. It was the third consecutive month of record iron ore sales. The Aussie dollar is trading at 75.5 US cents, and just recapping Wall Street, the S&P 500 rose 0.5%, the Nasdaq added 0.8% to close at a new record, while the Dow Jones Industrial Average ended 0.2% higher. Bitcoin fell below $30,000 a unit for the first time in 5 months before recovering a little late in the session, and oil prices hit new 2-year highs on demand optimism. That's it for the afternoon market report for Wednesday, the 23rd of June 2021. Join me tomorrow morning for the regular edition of Fear and Greed, followed by an interview with Dr. Mel Marquis, Senior Lecturer in Law at Monash Law, all about cartels. I'm Sean Aylmer. Enjoy your evening.